Sunil Kataria joins us, CEO with Godrej Consumer Products, to talk about the sector, rural demand, what is happening to Godrej Consumer, both internationally and domestically. Sunil, fantastic to have you back on ET Now. Thank you for joining us. Everybody is gung-ho about the rural recovery. In your experience, based on the channel checks you've done, and since you have a very large representation of rural economy in your business, what is your understanding?
Okay, I think this one theme which has definitely panned out as a complete reversal from what was last year is an outlier performance by rural. And that started happening, I think, from May onwards. And very clearly, I think it's a structural shift. And this is something which augurs very well for the FMCG industry, and I would say for the economy as a whole, because it's a very clear pattern that whenever Indian GDP has done well, rural has always outperformed urban. And I think that's an important sign. And I think there are three pieces which are really driving it. One is, I think, clearly we are still a pretty agri-dependent, part in rural areas. So I think there has been a good harvest. I think the good part is the monsoon has been very, very good and pretty evenly distributed. That's another very important factor for that. The second is definitely, I think, as part of the various initiatives, the government has been, putting in a lot of investment and money into the rural markets in the hand of the rural consumer. I think that is driving demand. And third, which I'm not sure whether that's a structural one and will retain for very long, but yeah, there's a definite impact of reverse migration that we are seeing right now.
What is your plan in place to bring Godrej Consumer at par with some of the peer companies? I'm simply talking about return ratios, ROE, ROC. Every company in a sense would like to have, every FMCG company in a sense would like to have a very dominant market share, but also dominant ratios. What's your plan in place to go to north of 20% plus?
Ratios, one has to see that this is a game which has to be, you don't chase ratios. I think the game really from a business point of view, you chase the health of the business. And then the ratios start falling into place. And, so I think we are pretty much very structurally well established in all our categories. So I think the game for us has been always that, three things I would say. One is drive top line very, very strongly, look forward to and drive a double-digit growth consistently. I think that's one. Secondly, I think we are very, very good company in terms of innovation-led growth. And that's something which builds for the future. So I think that's another area which we have been investing very strongly. And if you see in the last 1 year also, and including the last 8 months of COVID, this is a pedal where we've actually doubled down very strongly because that's top line drives growth. And the third is managing cost. I think even before COVID, we have a very, very strong structural program of cost optimization, which keeps on continuously culturally taking out, inefficiency in the system. And I think we can manage this well across our categories, driving top line growth, building for the future, and managing cost. I think obviously these things will all, move further up only. So I see this not from managing really the financial ratios. I think this is to make sure that you help the business remain strong consistently. The ratios fall into place in our mind.
Okay. Raw material prices have been on rise. The categories in which you deal in, especially the soap category, we understand that there is a big uptick in raw material pricing. Are you in a position to increase pricing, reduce discount?
Yeah, it's okay. There's definitely been an upsurge in commodity prices in palm oil and related byproducts. Although the full impact of that is still panning out, we have seen in the last 10 days a duty reduction announced by Government of India. Parallelly, there has been export duty increase in Indonesia. So these are some balancing factors which are still playing out. But yeah, overall, there is definitely an increase in the commodity prices in the palm oil segment. So we are evaluating obviously as to what is the impact of this overall. But having said that, I can tell you one thing which has panned out very well this year is, and this is maybe COVID has played definitely a role, that the trade discounts in the category have come down sharply. So I think that is something which is, I think, helping the industry offset some part of these increases, because by and large, if you see the first 6 months of the game have been that all of us have been focused on ensuring a consistent and strong supply chain. And when the whole focus is where supply chain drives, the whole growth, the competitive intensity does, come down. So I think, yes, increase in palm oil prices, we are watching this. two things which are offsetting this for us is overall competitive intensity, which has definitely played down. And secondly, I think we have, again, as I mentioned, the previous point, we have some very strong cost saving programs. And I think that should partially offset it. But we will evaluate whether we need to take a price increase. We're still in the middle of that discussion.
Sure. Okay, fair enough. Sunil, let's talk about, how the market share has been shaping up for you. Have you lost market share in this period? Because household insecticides growth in India overall has also slowed down from 27% to about 4% in Q2. Share with us a little bit more on that.
So, okay, in the first part of over the last whole year pre-COVID, we had gained shares across every category for us. And in the first 4 months of this year, we actually had not, really subscribed to the AC Nielsen data because obviously the panels and all were not fully operational. But yeah, we have started subscribing to the data again in the last 3 months or so. And I can tell you the trend is pretty strong for us. We are seeing by and large across all categories, healthy competitive performance by us, and we are getting shares. And we are actually seeing that even if the category growths are slowed down, and since we mentioned some of these, we see it in two ways. In categories where we are, let's say, a strong number two, and by and large every category we are the number one or number two, we believe that our job is to increase our shares. And in the categories where we are the market leaders, we see our role is actually not only to increase share, but actually to drive category growth. So in fact, even if I have to look at HI, I think the whole focus for us would be that we are the market leaders. What are drivers which are either leading to a category growth or a category slowdown? We focus then on driving growth there. And hence, on HI, I would in fact like to point out, we are focused on driving trials of non-users to the category. And there's a lot of work which has happened through new products which we have launched in rural areas. And the second is a very important pivot, which again is playing out reasonably well for us, is upgrades from the lower formats to premium formats within the category, because that creates a lot of value accretion in the category. So I think that's the job that we see in terms of categories where we play the key role. Otherwise, I think other places, I think I'm pretty happy with the performance that we are seeing in terms of market shares.
Okay, so that's on the insecticide segment. Let's also take a look at the hair color segment. What kind of recovery you're seeing there, as well as the kind of growth expectations going forward on that front.
Okay, so this is a category which has really surprised us in the last 3 months. As we all know, discretionary categories got hit because of supply chain constraints in the first quarter of this financial year. And B, definitely these categories are driven a lot by social, stepping out, social mingling across people. So all discretionary categories have taken a pretty sharp hit. But the kind of recovery that we have seen in the last 90 days has been exceptional. In fact, it's taken us by a very, very pleasant surprise to us. And in our hair color segment, we are seeing very good growths starting from August onwards. And heading into the festival season, the growths have been pretty robust. Now for us, we had a lot of, again, NPDs which have helped us this. But at the same time, we're seeing our lead formats also done very well across in the last 90 days. The catch for me is how much of this growth is either, let's say, a festival demand growth or was a bit of a pent-up growth which was there because discretionary categories had suffered a lot. I think that's a piece which I would like to watch a little bit going into the next 60 days. But the way signs are looking, this is looking like a very, very sharp recovery in discretionary segments.
Was or how it was during lockdown to now when most of the economy has opened up?
Sorry, I missed your question.
No, I was just wondering as to what's been your observation in terms of how consumer behavior has changed as to what it was during lockdown up until now when the economy has opened up.
So, okay, I would say I clearly see, and when we were discussing recently inside also, I see the 3 phases of consumer behavior has happened from March to November. The first 3 months was complete playing with the unknown. So there, I think, behavior was completely led by panic because we didn't know the nature of this beast. We didn't know what it could do. and the extent of risk in terms of fatalities it had on all of us. So I think the whole behavior shifted towards protection yourself and your family, and there was a serious amount of panic around it because also there was a huge amount of supply constraints. So that was one mindset which consumers were looking at, and that's why we see during that time period, whatever consumption happened, that happened primarily indoors. The categories which benefited, there were benefit categories which were more health, hygiene, essentials, all that immunity builders, that all took center stage. I think as human beings and consumers, we got used to the second phase somewhere around July, when the partial unlockdown started happening. We also started understanding a little bit of that this disease is here to stay maybe for a year, and we have to learn to live with it. That's when I would say the movement started happening into what I call experimentation with the old and also learning to live with the new. Both happened at the same time. So if you see, a lot of movement happened of consumer behavior towards ordering online but at home. But discretionary categories started coming back. For example, Zomato, Swiggy's in-home food delivery started happening. You started actually going back to e-commerce and playing around with a lot of non-essentials consumption. That is the second phase. And I think the third phase is what we have seen is, by and large, when the economy is now in an unlockdown mode, is, I would say, I still would not term it revenge consumption, but I think we are seeing signs of some kind of borderline revenge consumption, if I were to use a hazy word, that yes, that we are trying to make up for the time lost. You are seeing, obviously, the beauty personal care categories coming out pretty strongly, led by e-commerce. We are also seeing discretionary categories making a very sharp recovery, like, for example, I told you about hair colors. So I think this is the third phase. What this phase will last towards is a question that how much of it was pent up and how much it will be sustained is a question still in my mind. And that, I think, will be driven a lot by how GDP recovery happens. The GDP recovery of the second quarter has been much sharper than what we all thought. And the quarter three is projected to be flattish. Now, if that happens, I think we will see actually an upswing in the revenge consumption. So I think these are three phases the way I have seen or observed the consumer behavior.
Okay. All right, Sunil, appreciate your time and thank you for joining us, and stay safe.